Welcome back. If you've just joined us, you're watching Business Morning on Channels Television. Now, it's not all good news from the oil market at this time as oil prices continue to spiral down. Production costs at oil field become expensive as well. But before we bring in Dolapo Oni, the energy head at EcoBank Development Corporation, let's take a look at the numbers from the market. Let's start by examining the performance of oil stocks that are quoted on the Nigerian Stock Exchange. We're looking at 40 oil. The volume pulled so far in the week is 27.6. 27,695 volume. The price of that stock, 330 Naira per share. Mobile, 145 Naira per share. MRS, 49.66. We're looking at a Wando at 3 Naira 80 kobo, Total 150 Naira per share, and Seplat 176.96. That's 176 Naira 96 kobo. Corn oil is at 24 Naira 74 kobo per share. In terms of the daily index return of the stocks, the oil stocks, we're looking at that. So far, it's been down 0.7%. Year to date, also down 6.2%. The price to earnings is at 28, and the dividend yield 2.2%. So what has been going on in the international market is also impacting on oil stocks in the country. And of course, we're looking at the fact that not much investment has been done in the oil market, and that is affecting the market at this point in time, given the fact that we're seeing prices going down, and there is no end to where those numbers will be. Dolapo Oni will flesh this up for us as he joins us right now in the studio. Thank you, Dolapo. Good morning.
Good morning, Bolaji. Good
All
to be
right.
here.
Thank you so much. I'm sure you've seen the numbers, you've heard the news. Are you worried about the falling oil prices at this time, and given the fact that the production cost is almost at the same level as oil prices, $30 per barrel, and we're looking at production costs of between $24 to $25 per barrel?
Yes, it's quite worrisome for countries like Nigeria. In fact, I'd suggest it's probably even worrisome for a lot of countries, not just Nigeria. Because, again, what you have to factor in is that if the average cost, for instance, for production is around $25 per barrel, and that is just across the country. Now, if you're talking about onshore, I mean, production cost is a lot lower. It's roughly around 15 to 20 per barrel. But as you start to go further off into shallow water, you're talking about 20, 25. As you go into deep water, you're talking about $30 on the average. But for a lot of deep water fields, actually a lot more expensive than $30. So for those kind of fields, you're already out of the market, out of the money right now. At
No
this
profits.
current prices, no profit, you're producing at a loss. Now, what most operators have, which always keeps them in business, is the fact that at any point in time you have a portfolio of both onshore, shallow, and deep water assets. Okay. So on some of your assets, you're still profitable and you're still making enough profit to keep running even the deep water offshore fields that are running at a loss. Then again, it depends on the kind of operator you are. Some IOCs actually have deep water fields that are a lot less than $30 per barrel. I mean, I've seen a few IOC fields that are actually producing from deep water that are less than $30 per barrel.
So how do they make money? You know,
now, so that's why, again,
how do they make money?
This is a bad time to be only focused on oil. You probably have to have some gas assets. Now, if you have gas, I mean, you're selling to power, you're selling to industrial company, the current pricing in the market still hasn't changed. You're locked into contracts for probably $4 per 1,000 cubic feet or $7, within that range in the commercial side of the market. So that helps to augment your revenue that is dipping from oil. Now, you may also have exposure to other things. For instance, there are IOCs that own small power plants as well, that sell power to the national grid, sell power to neighboring communities and the like. So that gives them additional revenue from that side. So I'd say if you're focused solely on oil, this is a bad time. But if you're diversified into several other assets, you're still a bit okay. It
seems this scenario is not only peculiar to Nigeria. Globally, there have been no investment in oil.
Generally.
Some countries are withholding the funds in terms of putting them into building more oil fields and exploring more.
Now, it's really a case of the capital moving around, you see, there's a limited pool of funds for exploration and, I mean, for looking for breaking new grounds. And that capital tends to move around to where maybe regulations are more friendly, or where, for instance, there's more reserves. Okay. I mean, typically for exploration, we've seen three major world regions: offshore Brazil, West Africa, and then North America. Those have been the three major focus for exploration around the world. But in the last few years, even that has started to go down, because despite the fact that huge discoveries have been made, for some, regulations have not been very good. For instance, in West Africa, Nigeria hasn't passed its PIB in years. Most of West Africa is just pushing out their oil law and petroleum laws, refreshing them. So capital gradually started to move away. Mm-hmm. Now, capital that moved out of West Africa actually went mostly to North Africa, up to the other part of West Africa. So we've seen a lot of exploration in Senegal, Mauritania, Egypt, Tunisia. That's where the capital moved to. So, and then countries like Nigeria, PIB has not been passed. It's not been favorable. So companies have started to draw down. And then with the low oil prices, exploration capital pretty much almost vanished. So, for instance, last year we did, in 2014, West Africa had like maybe 40 wells, exploration wells drilled. In 2015, we had only 16. So that's how it looks.
I know that information drives the markets everywhere, and the news that perhaps the NNPC could go PLC, it says it's going to raise some money by 2018. Can that also help the situation at this point?
It can. I think it's a good idea. It's a fantastic idea. And I mean, the fact that it came out at the time when Saudi Arabia had also just said they were also going to IPO their company, which, I mean, if they go to the IPO, that would be the most valuable company in the world, because they're talking about sitting on the largest oil reserves. They have the largest fields. They have the largest production. So, I mean, and then the lowest cost also too in the world. I mean, there are literally fields in Saudi Arabia you can scratch the ground with your feet and oil starts coming out. Yeah. So that for NNPC, it's a good one, because funding has been a major problem. Now, NNPC has not been able to fund JV cash calls for a long time. I mean, last year was fantastic because a lot of money went into JVs. So we started to see some of the IOCs looking at developing fields, and some of those fields came on shore last year, and some of them will come on shore maybe 2017 again. I don't see a lot of fields coming on stream this 2016. So funding is key, and clearly it can't be banking, because even the banks are overexposed to oil and gas at the moment, almost 26% of their loan book.
And the capital market help them?
So it has to be the capital market. And I don't think it will be Nigerian capital market also too.
Okay.
It will have to be both Nigeria and another capital market, maybe London or New York.
International, because I know that all eyes are on the capital market right now in terms of the plans to raise bonds. So this is the beginning of the new year, and everyone is looking for where to get the cheapest money. Yeah,
and there's another angle to it, in the sense that, I mean, if you're going to list on the stock exchange, there's a level of transparency and accountability that will be required. So that transparency into the NNPC would be really fantastic for the NNPC, because for years there's been complaint that NNPC is not transparent. We don't know what's going on in NNPC, but this would open up their books to the public.
Perhaps before now, or before then, they should begin to put their house in order.
Definitely.
So that by the time they come to the public, we all see how they look.
Definitely.
Okay, I just want to ask you, prior to the drop in prices, several IOCs had in recent times shifted more of the focus to the offshore areas as a result of onshore risks.
Yes.
And with a number of planned deep water projects expected to come on stream in the coming years, now that the prices are dropping, we do not know for how long that will be. They're dropping faster than expected. Do you think that these companies should begin to invest?
Okay, yeah.
Earlier than expected now?
Let me tell you the typical IOC mindset. IOCs are, they've been in the game for a long period of time. They have deeper pockets, and they have very long-term perspectives. A typical ISO thinks about the fact that all these are cycles. We go through periods of low oil prices, and then they come back up, and then they go down again. So now, if you invest, when you're investing, you try to plan your investment in such a way that if you bring your field on stream while oil prices are low, you don't ramp up production immediately, up until the time when oil prices recover, and then you ramp up production so that you can gain back some of what you lost in previous years. So they usually take a 10, 15, 20-year view on their oil fields. And with that, they can invest even when oil prices are low. So, for instance, if you look at Angola outside Nigeria, you are still seeing fields like Kaumbo, which is a 120,000 barrel per day field, coming on stream this year. We still have several other large fields also coming on stream this year in Congo, in several countries. Maybe not in Nigeria, but they will IOCs are investing. So for them, it's also a good time to invest, because field costs have actually gone down. Unlike before, when there were several contracts for drilling rigs in West Africa or drill ships, now if you brought your drill ship into the region, there's almost no contract. So you take any job that comes, and that gives you leeway for negotiation downwards. So the IOCs are taking advantage of that, but it's mostly to lock in development drilling for 2018, 2019 projects in Nigeria.
So what way for Nigeria right now, going by this news? Low oil prices, production costs are almost at the same level with oil prices, and revenues are not coming in as much as we expect. Government,
because again, don't forget, take for instance a field that has the price this morning is 28.36 or so when I left the office, and you have a cost of say about $25. That gives you just a margin of $3. Now, are you going to be able to pay tax on that? Are you going to be able to recover cost on that? Because there's cost recovery again and all that. So there's almost zero petroleum profit tax at this point.
And the impact of this on workers, because if the company doesn't make money,
companies will have to cut costs. So we've seen that
have to lay off workers.
Yeah, we've seen that happening already. We've seen a couple of companies that have actually laid off part of their staff, especially in the upstream segment. It's still happening, and even not limited to just oil and gas. Upstream is also the oil field service companies as well have started doing that as well. And so the impact is there already. It's negative. It's negative for the government as well because, of course, lower revenue. Now, I always need to say this. Nigeria's problem is twofold in the sense that it's not just the lower oil prices leading to lower oil revenues. Nigeria also is struggling to sell its crude. Because now Iran coming on the market in close proximity to India means that, I mean, if I'm an Indian refiner, I'm asking myself, why do I need to take my crude from all the way from West Africa when I can buy it from Iran? Iran has a wide variety of crude as well. They have heavy crude. In fact, they're bringing on a new crude grade in March, which is going to produce 500,000 barrels per day. That crude is... Now, part of the problem they have with that is that it's coming into the market in March when most of the crude contracts have been signed since December last year. So they will have to sell it into the spot market. Now, to sell it to the spot market, you have to sell it at a major discount.
Okay.
And major discount means that, of course, if Nigeria's Bonny is selling at 27, then they can sell theirs at 24 or 22.
Wow. So the outlook doesn't look good.
So yeah, the outlook is not very good.
We hope that something happens very, very quickly and in our favor, at least.
Hopefully in the later part of the year.
Find our footing.
Hopefully in the later part of the year.
Okay, thank you, Dolapo. Thank you so much. We'll leave it at that. Thank you for your insight. Dolapo Oni is the head of energy research at EcoBank Development Corporation. We'll go on a break. And when we return, it will be time to talk about the World Economic Forum in Davos Clusters, Switzerland. Stay with us.